Hello, and thank you for joining us today. My name is Courtney Robinson, and I am here to host Akoya's Privacy and Open Banking webinar and panel. And just to give you a little bit of background about how this is going to work, I'm going to introduce our panelists and experts who are going to be talking today. I'll give some insight and some background into how we got here, why we're talking about open banking and the Consumer Financial Protection Bureau's creation of Rule 1033 in open banking, and then we will get right into some discussion. And while the discussion is going on, please feel free to use the Q&A feature at the bottom of your screen to submit questions. And at the end of the discussion, we will be taking questions from the audience. So with that, let me get everything started. Our first panelist, Zoe Strickland. Zoe is a senior fellow at the Future of Privacy Forum. Over a 20-year period, Zoe has served as head of global privacy and other roles for Fortune 200 companies and agencies, including healthcare, banking, retail, and government. Zoe's experience in multiple industry sectors has given her a unique perspective on the evolving world of privacy, information protection, and effective compliance structures. Welcome, Zoe. We also have David Silberman. David is a senior advisor at the Financial Health Network and the former associate director for the Division of Research, Markets, and Regulation for the CFPB. He has been involved in consumer finance issues from a wide range of perspectives over 3 decades. Currently, Silberman also serves as a senior fellow at the Center for Responsible Lending and as an adjunct professor at Georgetown's Public Policy School and Harvard Law School. And finally, we have Behram Panthaki. Behram is the Chief Operating Officer at Akoya and has over 20 years of entrepreneurial and management experience from startups and enterprise companies, including building and scaling networks and a deep domain knowledge in payments. Prior to joining Akoya, Behram served as the COO for Accounts World and was responsible for leading operations and growth. Welcome to all of our panelists. So let's talk about how we got here. What is open banking about? What is 1033 and why are we discussing it? So the Consumer Financial Protection Bureau is one of our newest financial regulators created after the wake of the housing crisis and as part of the now colloquially known Dodd-Frank Wall Street Reform Act. And particularly one section called 1033, Section 1033 in the law itself, which is why we reference it that way, was about consumers' rights to open banking and their own data. So what does that even mean when we're talking about personal financial data rights? It means that the Consumer Financial Protection Bureau has been directed by statute in Dodd-Frank to figure out a framework for how consumers can take, own, and port their own financial data. And along with that, there are obligations around how companies have to collect and store the data, how banks and financial institutions have to format that data when they share it to keep it safe on the consumer's behalf, how to empower consumers with their financial data, and just overall provide better access to financial products. And it seems like a given in the world that we're in now, with a number of banks, fintechs, and technology working together to power financial apps, that a consumer or an individual like you and me owns our data, but that's not necessarily the case. You have an entire profile associated with you that is not only you, your name, your account number, information about your bank account, all these other things in your financial life. And the Dodd-Frank Act and the Consumer Financial Protection Bureau, through their proposed rule, have said that you should be able to take that data and use it how you decide it should be used for the products that you want to use. So this has been about a decade in the making, and over the past 8 to 10 years, the Consumer Financial Protection Bureau has done a lot of work to get us where we are today. They've done research with consumers, they've held symposiums, they have the proposed rule, they held a SABRIFA panel, which is a small business review, and now based on Director Chopra at the CFPB's comments, we should be looking at a final rule around these consumer personal financial data rights sometime in October. So with that setting the framework, I'd like to start right off the gate with David Silberman and ask, with this rulemaking in 1033, what do you expect to come out of it, especially as it relates to privacy and data security issues? What do you see on the horizon?
So thanks, Courtney. It's a pleasure to be here. obviously, I should begin by saying I don't have any crystal ball or unique insights into this. We have the CFPB put out a proposal, which indicates the direction they were thinking about going, and I would expect in general the final rule will follow the proposal. So in broad strokes, that means that data holders, which for this purpose, this rule will be for checking accounts, credit cards essentially, will be required to provide, in addition to any kind of an online portal for their consumers to look at data, an API essentially where the consumer can allow third parties to go in and access their data and port it over. The third parties will have obligations with respect to security, with respect to what data they take. So they only take data minimization, they only take the data they need, and they use it for the purposes for which they have been authorized to use it. What the rule is going to say about secondary uses by somebody who's been empowered to use the data, I think is an open question. And I think the rule will define the data elements that's provided, and that will likely include account number, routing number, and tokenized format. It will enable pay by bank transactions without requiring account numbers to themselves move through the ecosystem. So I think that's at a high level what I'd expect to see.
Zoe or Behram, anything you want to add about what you're expecting to see out of the rule? Zoe.
So yeah, I'll jump in. I thought there were a lot of really well-regarded features to the proposed rule, and you could tell it got that reaction from industry. It was a long time in coming, a long time and a lot of conversations and Sabrifa panels that you mentioned, and you could tell that it was well received because it got a lot of support in the comments it received, and even several commenters about how they should even widen the scope to more products and to more consumers. Obviously, there's a number of important areas that got a lot of attention as well. And the things that we saw at FPF that we thought were particularly valuable, one is it was very consumer-centric. Consumer makes decisions, consumer directs it. If you think about it, open banking really is kind of a business case for data portability and how do people control what happens to their data and who gets it. We thought it was very thoughtful about providing privacy and security obligations on all parties in the ecosystem, which is important as well. They have different regulatory backgrounds, but yet it's very important that both the use of their data and the security of their data and their money is protected, and the phasing out of screen scraping, which we think is clearly not the right practice. I think that was supported. And then also having a role for industry standard setting, which we thought was a good development. Oftentimes, industry is closer to technology and user experiences, and so can sort of best think through what that kind of standard looks like, all within a regulatory framework that the regulator directs and controls. For us, we have some areas of focus in our working group, and yes, there are a lot of gray areas in this place because it's got such a broad remit and covers so many parties when they all intersect with the consumers. So just three that I'll mention, they're sort of our top line focus areas. One is around the granting or denial of access to the API. Pretty damn critical, because otherwise the data is not flowing. And the data providers have to perform that function, which I think was pretty expected in the standard today. But the rule put a lot of thought into like, how do you walk that line so that you're doing the right, that you've got both responsible and ready third parties as well, but you're at the same time not sort of limiting innovation and the data flows. So what does that look like? And then second, the privacy obligations that David mentioned, they're new in the financial sector. So what does it mean if it's reasonably necessary in terms of using it? What's going to happen with other uses of data or de-identified data, how that final rule plays out, and collection and retention obligations. Those will be important as well. And then again, rounding it out, what do standards look like from industry? We're part of the FDX organization that is looking at the API standards. So there's a lot more still to come as we both wait for the final rule and think through these implementation and public policy issues.
You mentioned
Yeah.
I'm sorry, go ahead, Behram.
No, I was just going to add that the way I look at it is that this is the starting of the journey with the CFPB and the rulemaking, and that there is a lot more that is going to come in terms of other covered data elements. And I think what's going to be interesting is how we figure out the ability for a consumer to consent to their data, figure out a way for them to revoke consent, and how that flows through the ecosystem is going to be very important as we navigate this rule. And as Zoe said, that is one area where there is a little bit of gray, which the industry will have to work through.
Yeah, so Behram, you touched on part of what I was going to circle back and ask Zoe, and then open up to the rest of you all with these new standards and this new framework. What can we expect to see, or what is the potential impact of the CFPB's rulemaking overall on privacy?
Yeah, I think it's a very thoughtful step forward in a very complex area, highly regulated, at least in terms of the FIs. And again, a lot of different parties will have direct relationship with consumers, so they're not vendors. So it's not like, oh, well, I manage, your engagement with the consumer. You really shouldn't. They have relationships, but you still do want to make sure that the right rules are being followed and consumers are being protected while they're exploring these new products and services. So I thought there were a lot of features to it that were very forward-looking in privacy in terms of consumer control. I think there are still some questions about, yes, if consumers are directing the use of their data, then they should be able to choose perhaps other uses of data. We'll see how that plays out. And so there are some questions still to work through. And I do think, however the final rule pans out, I agree with Behram. They're going to have more rulemaking. They've said that they need to. The ecosystem's not complete yet. And I think there's a lot of features for industry to think through and work through together and sort of figure out what's the best way to do this, because we're going to have consumers who are waiting for products and services. So we've got to figure out how best to fulfill that in a reasonable way that's protected.
Right. So it's important to get this all sorted out in the correct way so that there's no unintended impact to consumers as we're going into this new space. Let's go by. Yes, David.
It seems to me, if to ask the question, what's the impact on privacy, and I agree with much of what Zoe says, when I think about what's the status quo ante. So the status quo as we find it right now is banks are free to do anything they want with consumers' data, share it with anybody they want, subject only to the right of consumers to opt out. That's the Gramm-Leach-Bliley regime. And that is unchanged by the rule. So to the extent that's a privacy issue, that privacy issue remains. The second part of the status quo is that it is in the bank's discretion whether they would allow consumers to port their data to someone else. The largest banks have all agreed to do that and have created APIs and worked with aggregators to do that, like Akoya. Less true for smaller banks. So the effect of the rule will be to broaden that, to make that what's now exist as a matter of essentially grace and contract rights between banks and individual aggregators, a matter of legal right between consumers and their banks. And that, I mean, that's a big change. One of the things that the rule does, I should have mentioned earlier, is the CFPB clearly does not want to embed aggregators as a necessary element in moving data from data holders to end users, to fintechs and the like. And so it creates the right for a consumer to designate a individual fintech as the data user and the fintech to go directly to the bank. And that'll create a lot of complexities because that's not the way the world works today, even where the APIs exist.
Thank you. I mean, can you go into that more? I see Zoe's chiming in. Yes.
Yeah, if you don't mind, I want to underscore something like I thought was so important. In the prior privacy regimes, GLB is one of them, a lot of times the consumers were allowed to make an opt-in or an opt-out choice, affirmative or passive continuation of activities based on what the company wanted to do. So the company wants to share data. Are you okay or not okay with that? So it was really what the company was doing. And I think one thing that's been going on in privacy, both here, but also in other jurisdictions, other places, of kind of modern privacy tenet is around, well, this individual's right. So what does the individual want with the data? And so, of course, then it does have to be much more directed from them. It's not so much an opt-out. They're meant to be in charge of it. So it's more of the, what does the consumer want and how do we understand that? How do we best display it to them? How do we understand what the change management looks like? All sorts of parameters that go along with that. But I do think that's a shift in privacy that's pretty important.
I totally agree. I think the control is now getting handed back to the consumer. The consumer has the ability to define what data is shared, what bank accounts, what data elements. There's data minimization that can be opted into. And then also there is the duration aspect of data sharing, which is how long do I want to share the data? And there is a requirement to at least periodically refresh that authorization so that if somebody's forgotten that they have opted into sharing data, they have the ability to sort of remind themselves and opt out. And I also think the regime is changing a little bit where there will be multiple entities who will manage the consent. It could be the data recipient, it could also be the data provider. And so the consumer will have multiple ways of getting around the sort of sharing of that data and the revoking of consent, which is very important.
Good flag. You guys mentioned in talking about the way that this data sharing happens, you talked about current banks and financial institutions working with APIs for perhaps the uninitiated in the audience. Can you expound more upon how that works? Maybe not at a super technical level, but just what we're talking about in the different ways that this consumer data can be shared.
Sure, let me take a crack at that. If you think about the current sort of predominant way of sharing data, it is through what they call screen scraping, where a consumer provides their credentials, their username and password to an entity. The entity holds the username and password and then uses that to log in on the behalf of the consumer and access the website and collects all the pieces of data that is relevant to that performing of the function. And so the challenges there is, one, the consumers providing unfettered access to their bank information, to the entity that is scraping the data. The second is that they're sharing credentials, and those credentials are stored in a database somewhere. It's a secure database, but it creates a honeypot of credentials, which is a dangerous environment to be in. When you sort of work into the API-based model, there it is, the consumer is not providing credentials. If they're actually going to their financial institution, they're authorizing access at the financial institution. And then the data recipient is using a identifier that goes and enables them to collect data on a periodic basis as required to perform the function that is mandated by the consumer. So the consumers has a lot more control, and the API-based methodology is not just safer, but it's more reliable. There's no screen scraping where a one-time password gets popped up and the connection breaks, or there's a change in the website and the connection breaks. So there is a lot there that enables the consumer now to get better services by accessing and sort of providing access to the data.
Yeah, I can just say, as a long-term privacy professional, and maybe doing legal and compliance for way too long, the idea of sharing your password and credentials to your bank information is not a good practice. I think that's widely understood. It's just a question of how quickly do we phase off of it, and what does the alternative look like? Because honestly, if you think of it, besides the privacy and security missteps that can happen, if you've got a bad actor, they're in there. It's a vulnerability for consumers, and they are working to phase it out.
I think the other thing that's important about APIs, as I understand them at least, is that the data that one can get is defined by the use case. And, there'll be a different use cases, and for particular use cases, particular data elements. So if I'm trying to access data simply because I want to verify that there's money in an account before I make a transfer, I can see the balance, but I can't see transactional history and other things like that. If on the other hand, I'm a personal financial management app that's trying to help people know what expenses are coming due when, I have access to transactional data, but the APIs will define use cases and data elements that go with each use case, as opposed to in the screen scraping world where you can see anything that a consumer can see. And that has privacy benefits. There's also if the use cases are not defined well and all the data elements are there, the consumer's desire to actually get a service could be frustrated because they're not getting all the data that is really is needed. And so that becomes an important thing that gets fleshed out through data standards and the like.
Nice. So you all have given some good insight and background as to why consumers should care about this, how and why it will benefit them, and what the space is going to look like in a post 1033 or open banking world. What about the financial institutions themselves that have to comply with this rulemaking and facilitate the open sharing of data on the consumer's behalf? Behram, what are some technical changes that fintechs and financial institutions may need to make to comply with 1033?
So if you think about sort of the rule, it spells out sort of the obligations of the data provider and the data recipient, and there are obligations on both parts of that ecosystem. When you talk about data providers, I think the first step is that the data provider must furnish the data, and there are a set of data elements which comprises the covered data, which has to be enabled. And so financial institutions will have to figure out a way to ensure that they can provide that data out through an API, and it has to be timely data. And so all that is sort of on the data side. The second is enabling the authorization of the consumer such that the consumer can come, get authorized, and that authorization then is transferred to the third party who can then come on a repeated basis and collect the data. So that is the second technology piece that needs to get done. And then the third is they have to manage the entire consent management, the revocation of consent, and that's on the technical side. But then on the sort of non-technical sides, there is a lot that needs to be done to enable a third party to access data. There's the safety and security and the risk reviews. There are contractual obligations, that actually the integration, maintaining the sandbox, maintaining data, ongoing monitoring of third parties. The list goes on and on and on. And so there are a fair amount of obligations on the data provider around sort of how will they be able to furnish this data out to authorized third parties. And then the authorized third parties on the other side have to follow data minimization standards. They have to ensure that they're getting informed consent from the consumer. They have to ensure that they are retaining data as required, deleting data. So the right to forget or to be forgotten is important to the consumer. If a consumer says, I no longer want to use your service, the data has to be deleted. And then there is always the security and safety of the data. How do you ensure that you are maintaining the data in a secure enclave such that no bad actor can access it? So those are some of the obligations on both sides, data provider and data recipient.
Yeah, I'm not sure I read the rule quite the same way on the data holder side, I must say. That clearly the data holder has obligations to make data available. But whether the data holder, I believe, could say that if Plaid, for example, comes to me and says this consumer has authorized me and I have gotten informed consent, a data holder could say, look, I want to verify that, or they could accept that. I don't think they have obligations on their own to independently manage consent or authorization. I think that's left up but they have some rights if they want to, but not obligations in that regard. There are clear obligations on the data recipient to make sure that before they get consent, they have provided various information, they've made commitments to various security standards and the like. But the data holder, I think, is that has the right to question that, but not the obligation to do so.
Yeah, Zoe.
Yeah, it's funny because I was over the course of my career, I was both at healthcare and then at a bank when screen scraping became a practice that the companies are paying attention to, and concerns about destabilizing their websites, and who are these folks who are getting access to data, and how can we tell them apart from folks who are bad actors. And the initial answer was API, and I think that's right. API is much better way to transfer data, but this conversation here just shows there's a lot more questions besides API in terms of roles and responsibilities. So data providers under the rule, and I think this is going to remain and sort of makes sense, they need to set up an API that meets the standards of the rule, and they need to determine whether or not they grant or deny access to the API. Two fundamental things before any data actually moves. But then there are a lot of other questions, and we're sort of talking about several of them, which is, okay, well, how do you make that decision? Because again, their functions are very mature in the vendor space. Years and years and years of activity around how do I manage third parties, and that's something that's easy. Of course, it's not. You know, it's hard to manage another company, but these are not vendors. Like, okay, well, what goes into that decision? How far does my oversight need to go? I can't be blockered either. Maybe we have all these different parties that are interacting with the consumer. Who collects the consent? How does it get changed? Who revokes it? Who shares what with who? What if there's a customer service question? Where does it go? So there's a ton of questions besides the API technical questions that, again, are getting a lot of attention from both the rulemaking entity as well as the companies themselves, and what actually makes sense in terms of the consumer.
So even with what we've seen from the proposed rule, there are a lot of things that we know that financial institutions, data providers, and authorized third parties will have to do. But there's also, it sounds like, a lot that is still up in the air in terms of those gray areas in authorization.
Yeah, the details of the implementation are really important.
Yeah, for sure. So with that, how does your organization, or actually how do each of your organizations view 1033 in the broader context of supporting privacy and data access for consumers? And do you all believe the rule as drafted supports the overall goal of consumers owning their own data? Let's start,
So
David.
I can go first.
Okay.
I can go first. I think this is a step in the right direction. We're providing more control to the consumers, and every entity in the ecosystem has a role to play. And Akoya is a data access network. We play two roles in the marketplace. We play a role of providing access to authorized third parties through our data access network, which is our gateway product. We also act as a service provider to financial institutions, where we provide them with services around hosting and building out their hosted developer interfaces and managing the hosted developer interfaces. And so I think it's a step in the right direction. There's more to be done, including figuring out a way to eliminating screen scraping. There's more to be done around adding to covered data. I know that Director Chopra has added that he's going to be working on mortgage nets. And so there are elements of data that will be added to the rule in the future to ensure that consumers get a more complete picture of their finances.
Zoe?
Yeah, sure. Yeah, I agree. Definitely a step in the right direction, and sometimes multiple steps in the right direction. I think one question that's about, a couple of questions about privacy for a while. One is this whole question you teed about ownership. And that has a lot of other aspects to it too. Are they third-party beneficiaries of the contract? Do you pay them? Again, putting on long-term legal and compliance hat. But I think the more central question, which the regulators and policymakers in many jurisdictions are looking at, which is consumers have the right to understand their data, to direct their data, to control, even down to things like Behram mentioned, like retention. That was never something that was in older time periods of privacy. So a lot more focus that companies and people can understand in terms of what is it that we need to be providing consumers and what are their rights. And that includes redress as well, if they have questions or concerns or problems. A second question that's been kicking around in privacy for a while is, to what extent, both in terms of how you disclose things to consumers as well as the kind of consents and options you give them. At what point does it become fatiguing? Right? People always say, well, we want the notices to be short and clear and simple, understandable, but yet they've got to be complete. It's got to cover all these things, even like retention. That makes it hard to keep it short. So, and do you do that through layered notices? What does that look like? And the same thing with consent. And I think there've been some very good research been done lately, which is where it's something that they care about, like this, or maybe other things, and the options are provided to them in a clear and simpler format. They actually do like it. I think Behram mentioned, like, what data are you talking about? Which we need to know that, right? And it's so. What does that look like? And it's I think very good for the privacy professional community to think through. Okay, things are evolving, and the younger generation is so savvy with digital and other technologies that there will be this greater sense of engagement and control from them. So yeah, I'm going to say multiple steps in the right direction. I want to talk about de-identification in a second. That one maybe not so much, but generally speaking.
Yeah, so I certainly third this at the step in the right direction. I think the area of question is that, look, data holders, banks have legitimate interest in assuring that yes, the consumer has in fact consented to this data flowing to this person, that the entity is that's going to get the data, will keep the data secure and all those things. Those are legitimate interests. But one can imagine processes being created to protect those interests that create a lot of friction in the system, or to use the term that Richard Thaler and Cass Sunstein use, a lot of sludge, that actually make it difficult for consumers to vindicate that right. And that's an area where the rules sort of least less clear about. It says that if there's certain circumstances in which banks have to provide access to the data, but the circumstances are defined sort of broadly, and how much play in the joints, and whether what emerges is a system that is fairly frictionless while still protecting legitimate interests, or is challenging for consumers to navigate, is, I think, a not yet fully resolved question.
And before I go on to our next question, I want to remind everyone who's watching that you can submit questions via the Q&A function at the bottom of the screen. We've already got a couple of questions that we're going to get to in a bit. So thank you for those of you who have submitted questions so far. So what do you all believe will be open banking's impact on equity? And I know that's fairly broad, but what are the equity and accessibility implications of a post 1033 world? What will be different for a consumer who's using financial services or financial institutions to manage their data and lives? What's different?
So potentially, at least, one use case for transactional data from checking accounts is to facilitate cash flow underwriting. And cash flow underwriting can indeed open access to people who do not have a credit score or credit record, or whose credit score credit scores are lagging indicators of one's financial position. And so people for whose credit scores may understate their current ability to handle credit. So that's certainly one area in which it could expand financial inclusion, at least on the credit side. The data has the potential, and this is not really about financial inclusion, but open banking implies the ability to move from bank to bank, and it can, to some extent, facilitate account switching and perhaps create more competitive markets. The CFPB keeps talking about that. I'm skeptical as to how really impact the rule will have in that direction, but that's at least a possibility. And then certainly another use case is that has been just used as personal financial management, and helping people do a better job of, or be able to assist in managing their money, anticipating expenses, automated savings, those sorts of things, which can make for the more financially healthier consumers, whether they're currently included or excluded from the financial system.
Yeah, I think that there's broad support in the nonprofit and consumer-facing community that open banking will provide more benefits and services to underserved populations, including managing their data and their accounts, because financial health in the country, about living paycheck to paycheck, how do you help people understand that better? There were a lot of comments, I think people saw them, relating to expanding open banking to EBT and to more government services. And I have to admit, I was quite educated, because their ability to understand how their accounts are being, what even their balance is, so I think that that's going to be a step that's going to be coming, and I think that'll be enormously beneficial too.
And there is a lot of unknown here. We don't know how innovation is going to take place and how open banking is going to become that stepping stone to enable new models and new innovations in the industry. So it's an exciting time where we are all participating in the ability to sort of build this ecosystem out.
Nice. David, you mentioned cash flow underwriting as one of the potential benefits we could see coming out of this space. Can you provide more detail on what cash flow underwriting is?
Sure. I mean, cash flow underwriting means looking at one's checking account inflows and outflows to reach a judgment as to whether the individual has the ability to manage new credit. Traditional credit underwriting, credit scoring is looking at past payment history as the primary driver of a credit score. The premise is the past is prologue, and if you're somebody who's shown that you have been able to pay your bills without falling behind, that indicates you're a good candidate for more credit, at least so long as you're not heavily utilizing your existing credit and applying for lots of new credit. But that means that if you were somebody who hit hard times and have recovered, your credit score may be a lagging indicator. Conversely, if you're somebody who's just hit hard times, your credit score may overstate your actual financial capability. If I can see how your inflows compare to your outflows, hopefully be able to everybody's inflows and outflows in some sense are more or less in balance. Otherwise, people would just be building bigger and bigger checking account balances. So you have to be able to distinguish money that's flowing out into a savings vehicle, an investment vehicle, from money that's being used for consumption, and figure out, does this individual have this residual capacity to absorb a new obligation, and it can either supplant credit scoring, particularly if people don't have a credit score, or it can be a supplement and enhance the predictiveness of existing models.
Thank you for that. I think, because we have a number of questions coming in, I'm going to go ahead and start the transition to the audience Q&A, and thank you all again for submitting those questions. I see one in particular from an audience member that I think taps into some of what Zoe spoke about with different account types. So I'm going to direct this question at her and then open it up to anyone else to answer in the panel. What do you think will be the fast following account types that the CFPB will be mandating to share? So suppose under the rule, what else might be captured under that umbrella in the future? And how soon do you think that will happen?
So the ones that were brought up in the comment letters a lot, and the CFPB has been pretty open about. Mortgage is likely, payroll is likely. I think other kind of loans are likely. Because if your goal is to say, how do I have a good understanding of my money, those are pretty big things. And so those have been brought up several times, and the CFPB has talked about it. And there's some question about when that rulemaking might occur. Some people think next year. And I also think some activity around some of the government products like EBT, like I mentioned, just because even though it's a different animal and has some other issues to work through, it's pretty important. So I think we might see that as well.
Yeah, I expect the rule that they issued in October will cover EBT. That was, they got a lot of comments on that. We don't know that, but that would be my guess. And I agree with Zoe, particularly today, the CFPB issued an interpretive rule proposal, so only tangentially related here, but whether earned wage access products are covered by the Truth in Lending Act. And in the course of that, they intimated they would be providing access to payroll data as a next step in the 1033 journey. The CFPB issues semi-annually a regulatory agenda which sets forth what they're planning to do. This last one, which was just issued a couple of weeks ago, puts in the long-term category the next 1033 rule, which means they don't plan to start working on it for another 12 months.
All right, we have another audience question. I will read it and then see if anyone wants to jump before I pick you and make you answer. Will open banking integrations help solve for the inequities that have always been a part of our credit reporting systems? Zoe?
Oh, Lord. So one of to David's point, in their publication of upcoming rules, and it's been expected for a while. The CFPB is expected to do an NPRM on the Fair Credit Reporting Act. And I think they're looking at a number of ways to improve how that system, which has been around for a long time, how that works for consumers. And there's a lot of intersection with 1033 as well, some of the defined roles and things like that, and the obligation of different parties, particularly if data providers are being directed to share data. Are they now a furnisher we hear about? And the recipient, what do they do in terms of engaging the provider in any dispute? So I think there's underlying themes in what the CFPB is doing in all these different rulemakings to make it more transparent, to give the consumer more rights, to put more restrictions on the parties, the companies in terms of what they can do and the ramifications there. So I think there's more to come in that space.
And as David mentioned, the ability to underwrite based on cash flow is going to help certain pockets of the population, the thin file, the no credit file individuals, and enable them to enter and get credit where typically they would not be able to do with traditional credit reporting. And so I think that is a benefit. I think the ability to show that you are on time on your rent payments, which typically are not included in credit reporting, would be a benefit to consumers.
And that set of comments was so strong in the comment letters. I think it'll be interesting to see how it plays out.
I agree with all this. On the other hand, the fundamental issue, credit scores capture centuries of past discrimination. And that's going to be true of cash flow underwriting as well. There's overwhelming evidence that people of color have, on average, lower credit scores than white individuals. That reflects the fact that people of color have less income, less opportunity, have been subject to massive amounts of discrimination. That's going to show up in cash flow data as well, I would predict. And so I think I wouldn't overstate the benefits of this from a equity perspective. We have a lot of things to do in this country to solve equity, and this is small step, maybe a small step, but only a very small step in that direction.
Courtney, on that point about the small steps, I do think I want to make sure we do cover the de-identification secondary use just for folks here. The couple areas where I would say, even though I think generally speaking they were positive steps and sometimes many steps forward, I was a little surprised that the proposed rule really took a very black line to say, well, we're not sure of secondary uses, which means using the data besides the primary product or service. They should be able to consent to that. And the same thing with de-identified data. And I'm hopeful in the final rule that those get adjusted. I mean, first of all, because the whole point of open banking is to foster people's decisions and desires around how the data gets used. And I understand the concern is around, at least the way I read it, that there were high-risk uses of data they didn't want people to just agree to. I'm like, well, two things there. One, if it is high risk, maybe it shouldn't be legal. I don't know. Or, making sure people really understand it. But again, this is meant to be what consumers want. And there's a whole lot of things that companies do with data. It's not just providing the service. Many people brought up, including us, product improvement, which you're actually kind of expected to do if you're regulated. So what does that look like? Hoping to see some movement there. And de-identified data, same thing. There's a lot of benefits internally. FCRA is one example in terms of how companies understand their customers in a de-identified way. And also externally, a lot of groups work with de-identified data for research purposes, completely understand that the concerns about re-identification, they're real, and entities have gotten better and better at figuring out how to re-identify people. But, you could put controls in place. You could say, especially internally, that risk is lower. And so what does it look like to have those controls in place? And even externally, when you're dealing with public interest groups, you could put some controls in place there, some contract things to make sure they're using it properly. So you don't run those risks, but you still get the benefit, both from a privacy perspective and frankly, security too, because your risk of data breaches goes way down when data has been stripped of a lot of identifying information, particularly sensitive data elements. I don't know if anyone else wants to comment on that, but I wanted to make sure
who are the winners and losers resulting from the rule? And I suppose, we don't have to necessarily take that as there are definitive people who will, or entities that will win or lose, but sort of creative with the thought, what are we going to see? Winners and losers. Behram?
I would definitely say consumers are winners in this. They are definitely going to get more protection. They are going to find that they can use the data in a safe and more secure fashion. So definitely consumers are winners.
Zoe or David, did you want to add anything before I go to the next question?
No, I mean, I certainly I agree with that. Again, if you think about if the status of quo ante is a world in which data holders have discretion what they share, when they share it, they are losers in the sense that now they're going to have obligations that they didn't previously had. As you said at the start, Courtney, those are obligations that Congress created 10 years ago, more than 10 years ago, in 2010. And so there, if what you're comparing to this to what the statute says, then I don't think it's really think about them as losers. They're actually gaining a system that will can work reasonably well. But if you think about this as a world in which this statute was not in effect, I suppose if I were data holder, I'd rather be in a world where I have discretion as to who I share with and under what terms than where I have obligations.
I would say losers are those folks who really stick their head in the sand about this. I think the ship has sailed. This is a new technology, a new approach. Consumers are expecting it, not just in the U.S. Many, many, many jurisdictions are doing open banking, open finance. So, at some point when the train is out the gate like it is here, it's better to get on board and figure out how it makes sense for you, for your company, for your relationship with other companies, with consumers, and try to figure out how it works for you. I do think, to David's point, if people are really trying to just hold on to their data, it won't go well for them. I think they'll be discovered, and it's pretty clear in the rule that activity is disfavored. I get it that you have to watch out for it, but I think generally speaking, the companies that are going to succeed are those who get on board this train.
Right. So I think you mentioned, and this is the first time I think we've said it, the US is doing this, but we're not the first to this in the world. So this is sort of a long time coming sort of thing, not even sort of. And also, David, as you mentioned, it's been Dodd-Frank has been 10 years now, at least. I can't do the math. but the winners are consumers, folks like all of us, and perhaps the losers are the folks who did not do their homework and are waiting till the last minute to turn in the assignment. So I have Behram, I have a question that I'm going to direct to you. What have you or perhaps others in industry been hearing from smaller financial institutions about their needs related to open banking?
As you look at the ecosystem, the largest banks have worked through the kinks in the armor. It's been almost a decade in the making for them. When you look at mid-sized and smaller banks, I think that's where a lot of the heavy lifting has to happen. And in that space, the actual technology is just a tip of the iceberg. There is a lot that needs to be done in terms of ensuring that you can operate a hosted developer interface at scale and ensure that you are providing the policies and procedures, you're providing the ability to create contracts, the ability to manage third parties. All the administrivia is a fairly large lift for financial institutions, especially the mid-sized and smaller ones. And they are looking for either their co-providers or other providers in the market to help them build out versus doing everything themselves. So we're seeing a good flavor of build versus buy decisions. How do I get some help in enabling me to create this infrastructure that I am now mandated to do.
Anyone else?
No, just to underscore the last sentence, that the cores for the smaller institutions, they're going to be heavily dependent on their core processors to manage their obligations under this regime. And I assume they'll be as is often the case, that's not going to come for free, and who has the leverage in that kind of negotiation is an interesting question.
Yeah, I would add to that. It's the cores and it's also the online banking providers, because some of the cores have a different online banking platform. So it's going to be a little bit of the core and the online banking platform, the core for the data, online banking platform for the authorization, and together there's going to be sort of, there has to be both of them working together to provide the actual capability to the financial institution.
Thank you, guys. Another question. In addition to bank data, the EU and UK through PSD2, or Payment Services Directive 2, also push banks to make available mechanisms to initiate payments on behalf of the consumer through APIs, which is something that's not currently in scope in the US. So do you think that that's something we will eventually see here? So basically, expansion of our prior question on how this might end up growing and what we put under this umbrella. Do you think that push payments can the US get there? Will we get there? Or are we still? Did anyone focus on that in comment letters? Even now that I'm thinking, Zoe, okay.
Yeah. So yeah, I would think eventually. I think there are concerns in every jurisdiction where this happened, and it takes a while. UK has been working in this space for many years. The pay by bank or push payment, can generate fraud. It becomes even more important that it's being done properly, because what if that recipient won't return the money if it's done incorrectly, or other activities. So I think it's definitely on the roadmap, and I think it's been a conversation amongst all the financial regulators, US and abroad, about, well, okay, how do you enable some of these functionalities that do create convenience to people, but do it in a way that doesn't create a lot of risk to them? Particularly, I always say, with privacy, obviously people's data is really important. We're talking about their money as well. So I think that it is on the roadmap, and how that plays out and how those controls are put in place will be important.
Because as I said earlier, the rule itself, the proposal requires that one of the data elements that be made available is either account and routing number or a tokenized version of that. So that enables pay by bank through the ACH system. It's one of the issues where some commentators have objected strenuously and have argued that the statute the CFPB lacks the authority to require that the statute says you own your personal financial data, and your account number and routing number is not part of that. Is not part of your personal financial data. If this rule results in litigation, it wouldn't surprise me if that's one of the issues that gets litigated.
Yeah, I agree with that. And it may well be that this gets pushed out a little bit longer. I don't know, but it's a very important point.
I have one more question, and this is going to back us up a little bit into the broader space and not the intricacies of 1033 as we've been discussing. But how does the Chevron deference ruling, so I guess the Loper case, impact the CFPB broadly and 1033 specifically? So what impact do you all see there, if any?
So let me jump in on that. And at the risk of sounding a broken record, it depends on what you believe the status quo it was before Loper. If you believe that the courts that were called upon to review the CFPB jurisdictions were faithfully following Chevron, if there was an ambiguous question of law, they were deferring to the CFPB, this could have a significant impact. I would argue that there's not a lot of evidence to support that view of the world as it existed. That the world as it has existed pre-Looper was that lawsuits were brought in Texas. the CFPB lost. An appeal was filed to the Fifth Circuit, the CFPB lost. And if that's the world, Looper doesn't change things much at all. And I mean, I think that's true in general, but it's certainly the case that in theory and in principle, I mean, 1033 is an example that the CFPB has interpreted what personal data means, what your financial data means, what it means to provide access. There are arguments that say that the statute, as long as you're providing the consumer with the ability to download data into an Excel spreadsheet, that satisfies the statute. That's a statutory question, which in theory would have been subject to the CFPB's, if it's ambiguous, the CFPB's reasonable interpretation previously, and no longer now it's de novo for the courts. As I say, I don't think that in the real world that was ever the case.
Well, I definitely wanted the Harvard guy to go first on that one. I would say two things. One in the Texas case, and depends what CFPB actually we're looking at, right? And the CFPB is known for pushing the envelope on its jurisdiction for the benefit of consumers. They're known for that, and sometimes they might push a little farther than others, and those sorts of actions might have some more pushback now. Things like 1033, I think clearly they've got statutory authority. And they spent a lot of time in the rulemaking going through their authorities and all the processes around, the consultations and all the rulemaking bells and whistles. And there were some areas that people commenting, really this, like, there are a few of them, like data accuracy, some other things, that really perhaps wasn't in at least the black and white world of 1033. Although you can make an argument, well, if your access to data, it certainly should be accurate data. So I think it depends on the rulemaking. I think all the agencies, CFPB included, are paying attention to that and what their authorities are while they're still trying to meet their mandate that they've received.
Thank you, guys. So can I ask Zoe, then David, and then Behram to please, for our audience, give information on where they can find additional resources about your organizations and about 1033 compliance and implementation?
Oh, sure. Thank you, Courtney. Yeah, look up Future Privacy Forum on the web. We've got a number of work programs, open banking being one of them, and definitely feel free to reach out to me as well.
Sure. So financialhealthnetwork.org is the website. We have done some, we did a joint with the FinReg Lab, published a paper trying to compile all the laws that bear upon data, open banking, how GLBA, Fair Credit Reporting Act, Electronic Funds Transfer Act, all these things apply. So there's that resource. We did some survey research into consumers' attitudes, and we filed comments with the CFPB, all of which are available on our website.
Akoya.com is the website for Akoya. You'll find our comment letter there as well. So we have put our thoughts together around consumer privacy in that comment letter. And if anybody wants to reach out to chat, you can reach out to either Courtney or myself.
Yes, I guess you can reach out to me too. Thank you so much, Zoe, David, and Behram, for joining me in this discussion today. You all are longtime experts and deep in the trenches on this sort of work and are very well respected. So I appreciate you taking the time to join me in this discussion and to speak to our audience here. To everyone who joined the panel, thank you as well. There will be additional follow-up with a link to the webinar recording and additional resources in case you want to come back and check on some of the things that we discussed. And again, we're here. All of our organizations are here to help in this open banking space in this new world we're going into. So again, thank you to the panelists and attendees, and we will see you all.
Thank you.